Welcome, dear traders. Today, markets are focused on the release of the US inflation data. After strong data on the US labor market, the consumer and producer price levels should provide the key piece of the puzzle. And this will largely determine further interest rate moves by the Federal Reserve. However, these reports will be released later in the United States session. Now let's take a look at the sentiment with which the Asia-Pacific currencies began Thursday's trading. The US dollar index fell to around 102.20 today. The US currency is down for the second consecutive session, and its rate against its six major counterparts was in the 102.10 and 102.30 range today. The greenback's decline can be explained by a drop in the US Treasury yields, as the key US inflation data could influence the Federal Reserve's monetary policy outlook. Markets are speculating on the timing and magnitude of interest rate cuts in 2024. New York Fed President John Williams commented on this issue. Now is a good time to think about the future trajectory of the regulator's auctions, and the policymaker noted. The greenback's reaction is reflected on the chart. In general, the US dollar index has been in a bearish trend for several months. It began to fall after Jerome Powell stated that the Fed was no longer planning to raise interest rates. If the bearish trend continues, the index will likely test the support at 101.70 or even 100.70. If we see a bullish scenario, the US currency may find resistance in the area of 103.00 and 103.10. The bulls in the yen took advantage of the dollar's retreat and strengthened the pair near the key 145.5 level. The dollar-yen pair tested the lower boundary of the 145.20 and 145.80 range several times during the Asian session. The yen still looks unattractive for investment. However, it's very popular in currency trading. Investors are using the Japanese currency as a stepping stone to other pairs. The Bank of Japan is unlikely to make any significant steps to strengthen its policy. On the contrary, the Japanese regulator intends to maintain its ultra-low stance. Moreover, in the aftermath of the devastating earthquake, the country's authorities are simply compelled to continue the government stimulus. In addition, falling inflation rates in Tokyo and the weak wage data are further diminishing the prospect of the Bank of Japan abandoning the negative interest rate policy in the near future. Therefore, the fundamental factors suggest that the dollar-yen pair may increase to the resistance area of 146.60 and 147. On the other hand, any further decline may attract the new buyers and remain limited near the psychological level of 145. Weakness in the US dollar and a rebound in the risk appetite were growth signals for the Australian dollar. The Aussie also found support from a stronger yuan and strong economic data today. Reports released earlier Thursday showed that Australia's trade balance increased in December. Moreover, the 11.4 billion surplus, the excess of exports over imports, was much higher than the forecast of 7.5 billion, confirming the stability of the Australian economy. Against the backdrop of all these factors, the Aussie strengthened within the range of 0.6690 and 0.6730 today. In Asian trading, it closed near 0.6720. However, the Aussie's next move will depend entirely on its US counterpart. If the US dollar's inflation data is strong, the Aussie may fall to the technical support level of 0.6670 and 0.6610. If the bullish scenario develops, the Aussie dollar pair may test the resistance in the area of 0.6740 and 0.6770. The New Zealand dollar also took advantage of the lull in the market and surged higher. At the time of preparing material for this video, the Kiwi was trading at 0.6258. In addition, bulls continue to push the Kiwi dollar higher within the intraday trading range of 0.6220 and 0.6260. Key resistance and support levels for the Kiwi are at 0.6290 and 0.6220 respectively. As the short-term reaction of the US dollar to the inflation figures is almost impossible to predict, the antibody currencies may also see a sharp change in direction today. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you next video.